Assalamu alaikum. Welcome to lecture 25 of ATX, the last lecture of ATX, and the topic is ethics. This question is very important for your ATX because you are going to get a question on ethics 100%. You are definitely going to get a question, there is no doubt about it. And also, your professional skill marks, some of your professional skill marks will be tested on ethics question. Okay, an ethics question is one of the easiest to score if you know the way of answering ethics question, which I will definitely teach you as we proceed. Now, so here we are going to focus on two areas: professional code of ethics, and we are going to go through the various thread and how to overcome those. Now, so the 5 fundamental principles. This 5 fundamental principles applies to all ACCA members: objectivity, professional behavior, professional competence and due care, integrity, and confidentiality. You must have heard about this. You are very familiar with all these 5. It's not new to you. So we'll just go through the definition very briefly so that you know the difference between this 5. So in your exam, when you're doing a tax return or you are giving an advice, you have to see that you are being ethical, that your client is meeting these 5 objectives. They are keeping their integrity, they are being objective, they are keeping the confidential information confidential, they are following professional competence and due care, they are having the professional behavior. All these are very important. Okay, now objectivity. So objectivity means you're not allowing your decision to be biased, or you're not influenced by others when you're making a decision. You're making an independent decision. Okay. Professional behavior. Members has to comply with laws and regulations. In tax, it could be tax rules and regulations. How do you comply with professional behavior? By complying with tax rules and regulations. Next, integrity. Integrity means you are straightforward, you are honest in all your dealings. Okay. That means when you're dealing with your client, your client is honest to you about their tax return. They're not hiding anything. They are nothing to do with you should accept a client who is straight and honest for us, who are not lying to you, who are not decepting you. Next, professional competence and due care. You should, as a tax advisor, okay, since this is ATX, you have to maintain your professional knowledge and skills so that you can give the most competent service to your client. Next, members should be diligent and act in accordance with the applicable technical and professional standards. Last, confidentiality. You should respect the confidentiality of information that you've acquired, and you should not disclose to anyone without the permission of third party. Without the permission of the person from whom you have acquired the information. Unless, see, in certain condition, you can't comply with confidentiality rule. Why? There could be various cases of fraud and all. Maybe the court needs it. Maybe there's a case of a fraud. Maybe there's a case of money laundering. Okay. So if you have a proper and specific authority to disclose, or there is a legal or your professional right to disclose, for example, money laundering, yes, you can disclose. Okay. And you should not use any information that you've acquired from your professional relationship for your personal advantage. Next, new clients. A member, you have to exercise professional expertise when you're dealing with clients. Before you take on a new client, you should consider this. First one. What is it? See, if you are acting for the client, it's a risk. Okay, there could be a risk in terms of the client's integrity. Maybe the client might not be honest. They might lie to you. They might be doing illegal businesses, and you are a tax advisor for that company, right? So this would include assessing the client's personal and business circumstance and attitude. So you have to see how your client is in their business circumstance, how they are personally dealing. What is their attitude to disclosure? Do they want to disclose Are they complying with tax law? Next, you as a member should have the skills and competence to give that service to your client. Third, you should see to it whether your client is involved in any money laundering activity or not. Next, so these are the information you should gather in a case of a limited company. Proof of incorporation and primary business address and registered office, structure, director and shareholder of company, identities of those persons instructing the firm on behalf of the company and those persons that are authorized to do so. In a case of individual, you have to get this information: proof of identity and residential address and any unincorporated interest. If so, details of the nature and the structure and those persons that are authorized to act on behalf of the business. Example, partners in a partnership. So once you have decided that you are going to act for a client, then the member should ask the permission from the previous auditor. Okay, you should ask the permission to contact the previous auditor, because you need information, certain information from the previous auditor for you to act for your client. Okay, and the previous auditor should seek the client's permission before they discuss any detail with the new auditor, the new advisor. Next, if the client does not give this permission to contact the previous advisor, what happens? You member should give serious consideration whether you should act also for the client or not. Next, so assuming the situation is satisfactory and you have decided to act for the client, member should issue a letter of engagement setting out the terms and conditions of the arrangement and other relevant items. Now let us do a question. Illustration 1. What is the reason for this communication? So, where a member is asked to replace a client's existing advisor, the member must request the permission of the prospective client to contact the existing advisor. So, the question is why you need it. So, these are the 3 reasons. Remember, these 3 reasons you can use in your answer. Okay. First one, so that you are aware of any factor that may be relevant to the decision as to whether to accept the work. First, you have to see if you are given any information, based on that you can decide whether you can accept the work or not further. Next, second, is aware of any factor that may have a bearing of ensuring full disclosure of relevant item is made to HMRC. You have to see whether full disclosure is made to HMRC or not. Third, reason why you have to communicate, as the information with regard to filing deadline, elections, claims relating to the client, so that no matter are overlooked during the period of the move to a new advisor. Okay. Next, after new client is conflict of interest. So you need your ethics when you're accepting a client. You need your ethics during the conflict of interest situation. So a member should never put themselves in a situation which can bring conflict of interest. Especially this happens when you're acting for 2 clients who are related to each other, who may be a supplier or customer of each other. So this can create a conflict of interest. If a member becomes aware of such a conflict, member should immediately address this. Okay. Where no appropriate action can be taken to avoid the conflict, member should cease to act in that manner. If you can't control the situation, can't avoid the conflict, you should not act in such a manner. Next, conflicts can occur in these situations: where a member acts for a client and is then asked to act for another party in a transaction. That means that party, another party in the transaction is a party to a client. They are related. Next, you are acting for both parties in a divorce. You are acting for the employer and the employee, where the advisor may benefit from the transaction. So these are the 4 situations. Next, sometimes it may be acceptable to act for both parties as long as there are safeguards, such as you are pointing out the conflict to the relevant parties. you should get the consent from both the parties before you act. Firm should have clear guidelines in how they are going to deal with confidentiality, and you should consider the need to use separate teams for both the client. Alternatively, firm may consider just acting for one party and not acting for another party. Okay, now let us do question. Test your understanding 1 and 2. In test understanding 1, describe 3 courses of action open to Mutia. So Mutia is acting for 2 parties in a transaction. So let us see the solution. Act for neither party, act for both the parties, act for one client. These are the 3 this thing. So first one, act for neither party. This option may not be in the best interest of everyone, but if there is any doubt, it is the recommended course of action. Next, act for both parties. This is possible if they have disclosed to both the parties involved and that they agree that they are okay if you are acting for both the parties. Next, acting for one client. This would normally be the client who first sought advice from the member. Whoever got first, better to act for them. Now, test understanding 2. Simon is about to give some tax advice to his client. If the client acts on this advice, Simon will receive commission of 2,000 from a third party. What action should Simon take? Definitely, they should inform. Simon should inform the client that commission will be receivable and the amount involved. Number 1. Number 2, he needs to ensure that the commission does not taint his advice. Because of this 2,000 commission, your advice should be independent, should be objective, and he preserves the normal standard of care with the advice being in the best interest of the client. Because of the commission, your advice should not be biased. You should follow the normal standard of care, and your advice should be in the best interest of the client, not in your best interest. Okay. Third area where you need your ethics is when you are dealing with HMRC. Make sure that information that you are giving to HMRC is accurate and complete. A member must not assist a client to plan or commit any offense. If the member becomes aware that the client has committed tax irregularity, these are the things they have to do. Member have to discuss it with the client and ensure proper disclosure is made. Now, examples. Not declaring income that is taxable, claiming reliefs which client is not entitled, not notifying HMRC where a mistake has given rise to an underpayment of tax or an increased repayment. Where a client has made an error, it is necessary to decide whether error is genuine or deliberate, or it's a fraudulent act. Now, once error has been discovered, member should explain this to the client and the requirement to notify this to HMRC. And if they don't do, what could be the implications of not doing so? Maybe the penalties and the interest. Then, the letter of engagement may include a section with regard to disclosure of information to HMRC. So, it would be courteous to inform the client of the intention to disclose. Now, if the client refused to make a full and a prompt disclosure to HMRC, these are the things you have to do. Member must write to the client and explain the consequences. Consider whether the amount is material, and if the amount is material, member should continue to act for the client. You have to see if the amount is material, whether you will want to continue for the client or not. If the client still refuses to make full disclosure, member should not act for that client. They must inform HMRC in writing that they are going to cease acting for the client, but you should not disclose the reason why. Then you must consider the member's position under money laundering regulations. Now let us do a question. Test your understanding 3. Here, what actions should you take? So when you are checking a recent tax computation from HMRC, you notice that they have made an error, which has resulted in your client receiving a larger repayment than they should have made. So now it's here. So you have to review this position carefully. First, you have to confirm whether the error has actually been made or not. 2. You should contact the client should contact for authority to disclose this error to HMRC. If the authority is not given within the letter of engagement, if it was not given previously. Now, if the authority does not exist, what happens? See, you are giving one after the other. If this is not done, you have to do this. If this is not done, you have to do this. Like that, you have to answer in ethics question. Okay. So if the authority does not exist from the letter of engagement, the client should be told the consequences of not disclosing the error, including the interest and penalty. If, so it's if, see, it's if the client refuses to allow the disclosure, still after knowing the consequences of interest and penalty, you have to see whether the amount is material or not. If the amount is material, you have to see whether you can continue to add for the client or not. Next, if it is decided that you should not add, you have to inform in writing this to HMRC that you are not going to add, but you should not give the reason why. And then you have to see this under money laundering regulation. You have to see whether it is necessary to report to NCA, National Crime Agency, under the money laundering regulation. So you don't directly fall under money laundering regulation. This is the last step after coming from all the steps. First you sit and review. Next you contact for authority. Third, contact is not that you have to tell the client the consequences of the error. Next, if still client does not disclose, you have to see the amount is material or not. Then you decide the amount is material, you are not going to add for the client. Give the reason in writing to HMRC why you are not going to add. Then you see under money laundering regulation. So how many steps are there? 1, 2, 3, 4, 5, 6. How many paragraphs? Each one point in each paragraph. You see, you can't write everything in one, you have to write in different paragraphs. So 1, 2, 3, 4, 5, 6. There are total 6 paragraphs, 6 points are there. Ethics question you usually get for good amount of marks. It will be tested. Around 7, 8 marks, sometimes 10 marks also. Okay. And all the ethics question, if you see, this is the pattern. They follow this pattern only. First they will sit and talk. Then they will see. Until they come to the last stage where the client is still not listening. So the client does not disclose, client does not listen, client does not listen until they reach the money laundering regulation. This should be the way you answer an ethical question. You have to see all the possible solutions. Directly you should not say, okay, don't add for the client because they are not disclosing. No, the steps. Next is employees. Where the member is an employee, the member may become aware of irregularities in the employers dealing with HMRC. Then what should the employee do? They should raise this concern with the appropriate person. If the member refuses, the employer refuses to take any appropriate action, employee then should seek advice from professional body. You have to remember the sequence, by the way. First, appropriate person, then they will go to the professional body for advice. And employee needs to consider the need to report to money laundering officer whether it is appropriate to continue in the current employment, and if it is necessary to disclose under the Public Interest Disclosure Act. Now, where the employee is responsible for agreeing the employer's tax liability with the HMRC, employee is in a similar position to members in practice. Remember, if you are an employee, you are told by your employer that you have to show the tax liability like this to HMRC and you know it's wrong figure. Then your role is as similar as to a member's in practice. Remember it. So if the employee discovers any error, default or fraud, employee has to bring it to the attention of the employer first and encourage the employer to disclose this to HMRC or to correct the error. If they don't, then go to the professional body, then don't act for the employer, things like that. Okay. Now let us do a question. Illustration 2. This question is regarding employee. Okay. So you have reason Move to work in the tax department of a medium-sized trading company. You have reviewed the recently submitted tax return and identified material error. You have brought this information to Cliff, the head of the department, but he refuses to adjust the figure. This will increase the tax payable and impact on his bonus. So, remember, taking no action is not permissible in your answer, okay? You should always take some action. So, you have to consider the following. First, what should you do? Is there anyone else in the company with whom it may be appropriate to discuss this concern? Number one, first is always this. Always see an appropriate person, someone in authority to whom you can discuss this issue. Second, after that, consider ACCA because it's your professional body, or any legal advice if you think it's required. Third, consider making a report to money laundering officer. Fourth, consider looking for alternative employment because the amount is material also. Fifth, the last stage, consider disclosing this under Public Interest Disclosure Act. Does the employer have any policies in regard to disclosure? Okay. You should keep a record of all the action that you have taken so that you can demonstrate later on that you have acted, at least you have acted properly throughout the situation. Now, money laundering regulations. So, money laundering is a term used for offences including benefiting from or concealing the proceeds of a crime. This includes tax evasion. Tax evasion we know is illegal. Okay. All businesses within regulated sector must appoint an MLR or money laundering reporting officer. Within the firm they should have this. They will decide whether a transaction should be reported to NCA, National Crime Agency. Where a report is made, remember when you are making this report to NCA, the client should not be informed. Why? Because then it will amount to tipping off. Then they can easily hide the evidence and things like that. Then they will become aware. The criminal should not be made aware. And it's an offense. It's an offense. If you are making the client informed also that you are going to report to NCA, it's a crime. Offense. A report to NCA does not remove the requirement to disclose the information to HMRC. If you have to report to NCA, still you have to disclose the information to HMRC. Now, dishonest conduct of tax agents. If there's a dishonest conduct from the tax agent, there is a civil penalty of up to 50,000. In the cases where the penalty exists 5,000, HMRC will publish the details of that penalized tax agent. And with the agreement of tax tribunal, HMRC can access the working paper of the dishonest agent. Tax avoidance or evasion. Tax evasion is unlawful. Okay. So a taxpayer who dishonestly withholds or falsifies information are subject to penalties or criminal proceedings. A tax advisor who is a party to that tax evasion is also subject to the criminal sanctions of criminal law. If you are concealing any material fact, that is also tax evasion. Tax avoidance, on the other hand, this is legitimate. Tax avoidance means you are trying to reduce the tax, but it's a legitimate, it's not illegal. You're trying to reduce the tax. So here, it's like through tax planning. Here your tax advisor will properly advise the client how to reduce the tax. Okay. Now, HMRC has introduced following things. Disclosure obligations regarding anti-avoidance tax schemes requiring declaration of the details of the scheme to HMRC. If you are going through any scheme to avoid tax, even if it's legal, you have to disclose the detail to HMRC of the scheme. Next, penalties for those who enable the use of tax avoidance arrangements which HMRC later defix. Let's say to reduce your tax, you are going through tax avoidance arrangements. Okay. Which HMRC later says that you can't use it, then there are penalties. You have to pay penalties for it. GARE, a general anti-abuse rule. is to counteract tax advantage arising from abusive tax arrangements. Not all tax schemes are good. There are some abusive tax arrangements whose sole purpose is to reduce tax only. So the concept of serial tax avoidance was introduced to further strengthen the regime designed to prevent aggressive tax avoidance. Those who aggressively avoid tax. So those who persistently engage in these tax avoidance schemes will be defeated by HMRC. You can't all the time engage in tax avoidance scheme. Okay? HMRC will increase your penalties. And also your details will be published by HMRC. Next. The ATX examining team expect you to be aware that there has been a general tightening of this rule in relation to what aggressive tax avoidance, but they do not expect you to know the details. You don't have to know the details of the schemes and all and how it works. You only have to know HMRC has now tightened the rules. They have become more strict in terms of aggressive tax avoidance. That's what you are expected to know. Now, general anti-abuse rule. The meaning of the relevant terms. Tax advantages means increased tax deductions, reduced tax liabilities, deferral of tax payments, advancement of tax repayment. 4 things. Tax arrangement means arrangements whose main purpose is to obtain this tax advantage. Arrangements are abusive when they cannot be regarded as a reasonable course of action. For example, where they include contrived steps or are intended to take advantage of shortcomings in the tax legislation. If you see that you are taking certain action and the reason is you are taking the advantage of some shortcoming in the tax legislation, then it's abusive. So if GER applies, HMRC will respond by increasing the taxpayer's liability. They might accelerate your tax payment or defer repayment. They will give your repayment later, defer, and ignore artificial steps in contrived abuse scheme. Okay. Remember, if HMRC is making any adjustment, that they are just and reasonable. They will just not make any adjustments. They will just not ignore your the schemes. Any adjustments that they think is not abusive, there are no penalties for it. But if they feel it's abusive, they will make certain adjustments, but they are just and reasonable, so that they can counteract the advantage that you have gained. There is a penalty of 60%. So penalty is 60% of the tax advantage. Now, this is new. Penalties for offshore non-compliance. This is for overseas. So to counter tax evasion, what do taxpayers deliberately do? They conceal, they don't show their taxable income, taxable gain and assets overseas, that is outside the UK. They purposely don't show. So in this case, there will be a higher tax geared penalty, okay, in relation to any error made in the offshore income and capital gain. So this regime relates to failure to notify liability or chargeability to tax, failure to submit a return on time, and errors in the submitted return. Now, this regime applies to 3 tax: income tax, capital gain tax, inheritance tax. The higher offshore non-compliance penalties apply if HMRC discovers that asset has been moved overseas and one of the above penalties apply. Then only this high offshore non-compliance penalty will apply. And the penalty is for deliberate behavior, and asset move was a relevant offshore asset move. Relevantly, you are moving the asset outside to save tax. So this took place so that you can prevent or delay the HMRC discovering about the asset. You have moved the asset before HMRC could discover it. That's the reason why you have moved. Then penalties will arise. There are 4 levels of penalties. Amount depends on the overseas territory used. Four categories exist and they have been defined by the treasury, and existence of degree of exchange of information with HMRC. If you are exchanging frequently the information with HMRC, amount of penalty will be less. If you are not disclosing, will be more. So the penalties are applied to taxpayer and anyone who helped the taxpayer to commit that offense. Now, in the ATX, for your ATX exam, you are not expected to know the detail in relation to the amount of these penalties or the categorization of overseas territory is not needed. Relevant asset move means that you are moving the asset from the country that exchanges information with the UK to one that does not. That means any country that does not exchange information with UK, you are moving your asset to that country so that they cannot communicate with UK, so that HMRC is not able to communicate with the country where you have moved the asset. That is the meaning of relevant asset move. Next, or the meaning could be owner of the asset has ceased to be resident in a country that exchanges information with UK and become resident in a country that does not exchange information with UK. Note that this penalties only impact on non-compliant individuals. If you are complying, there is no impact. So non-compliant individuals who have carelessly, deliberately submitted inaccurate information or failed to notify HMRC about income or gains from activities or sources of assets held abroad. Now, let us summarize this last lecture. So, professional code of ethics follows in the area of new client, conflicts of interest, HMRC error, tax avoidance versus evasion, and money laundering regulation. Thank you for watching, and my job is over. I've finished all the 25 lectures in ATX. You can go back to my ATX playlist and now get all the ATX lectures. Watch them and do revision kit questions and past paper questions, and do not forget to subscribe to my channel if you haven't subscribed, and you can get this ATX slides by emailing me. Thank you.